So a couple of things. Number one, they're not disruptors. They're going into a business and they're offering prices which are free, which many others are doing. So I don't think they're a disruptor. Number two, they haven't democratized investing. That's been democratized long time ago, and they're talking out of two sides of their mouth because they're going to own, I believe, about 16% of the company, but control over 60% of the vote. So let's go where their intentions are, which is not one shareholder, one vote. That's really poor governance. Now, I don't think Vlad, he's done a great job taking to this point, but thank God for the pandemic for them, because that fueled the growth. They were bumping along, they were growing, but you cannot value this company as a disruptor when it's not.
Then there's Robinhood, which is ripping again today. That's where we start because Steve Weiss is playing in this sandbox. I was surprised to hear about this, Steve. So you bought it yesterday, you sold it, and then you bought it back today at $60.20.
Yeah, and was in and out a few times since then. Look.
All right, today is Thursday, August 5th. This is a recap for the stock market activities today. Folks, we'll keep it short and sweet because I'm already starting this video late, and by short and sweet, I mean 30 to 40 minutes. With that being said, since we started with this piece of shit Steve Weiss, who's a quote-unquote expert on CNBC, let me remind you of who Steve Weiss really is. He's nothing but a pumper, a professional pumper, just like the rest of them on CNBC. All they do is pump, no integrity and no moral compass at all. Here is a clip from back in January 2020 when we started to hear about the virus in China, lockdown, cancellation, etc. The majority of us saw it as a risk. The majority of us anticipated that we're going to have a problem with the airlines. Not Steve Weiss, though. A viewer asked him about United Airlines. Should I buy the dip after the China scare, the whole virus, infections, yada, yada, yada? Should I buy the dip in United Airlines or not? And here is Steve Weiss's answer. And remember, he got a pump because he is a professional pumper. That's all there is.
Look, 16% of their business is Asia, 6% is China. Hopefully this is a one-quarter phenomena. The stock is exceedingly cheap. If you buy it here, I'm not going to guarantee you anything, but I would be shocked if it's not higher in 6 months going forward and meaningfully higher. It's selling now. I got to do the numbers. Don't know what the numbers will be with China, but maybe it's 8 times, 7 times earnings. I'd buy it.
But enough talking about this piece of shit, and let's move on to In Focus tonight. We have some catching up, so let's do that. We will start talking about the statements out of the mouth of Fed Vice Chairman Clarida, or Clarida. Depends. His wife calls him Clarida. His mistress calls him Clarida. And of course, you're going to ask, how could he have a mistress? The guy is old. He's actually a rock star. Of course, he has a mistress. We'll talk about that in a little bit. But we'll also talk about the situation with the conflicting information, quote-unquote conflicting information in macro. You have the arguments between the inflationary camp and the transitory camp. I got updates for you. And then we'll talk about the Robinhood mania and the Robinhoodiots, who have the worst Stockholm syndrome that I have ever seen before. But let's start with Vice Chairman Clarida. He went on TV and said that he sees upside risk for inflation. Oh, you think? And he suggested that tapering will start in 2022, and then rate hikes will start as soon as the end of 2022, the beginning of 2023. And when Clarida says the end of 2020, perhaps he means maybe the beginning of 2020. Of course, what is he talking about? The Fed has been maintaining the transitory argument. Why is Clarida this time around moving away from the playbook and the false narrative out of the Federal Reserve. Or perhaps Mr. Clarida realized that he's not going to be Fed chairman, even though he is the vice chairman. He is the second in line to replace Jerome Powell. But we know that the BlackRock administration, led by President Joe Biden, will have to pick a woke choice, just to give you the illusion of progress. And therefore, his top two candidates are Fed Governor Brain Dead and Fed President Boystick out of Atlanta. Both part of the system, both breeds of the same scum, regardless of their gender or their skin color. They all went along with this disastrous experiment, the greatest experiment in financial history, which will lead to the greatest disaster in financial history. Brain Dead, Boystick, none of them ever protested this insane, reckless, and irrational monetary policy. If anything, they continue to support it and give cover for it. And this is exactly what Fed Chairman, Vice Chairman Clarida said. And by the way, he's using the green screen with the fake books behind him to give us the illusion that he's smart. Clarida, the books are bigger than your head. Either you have the tiniest head in the planet, or you're not going to fool anybody with this green screen. Anyhow, this is what he said.
Let me be clear on 2 points. First, if as projected, core PC inflation this year does come in at or certainly above 3%, I will consider that much more than a moderate overshoot of our 2% longer run goal. Second, as always, there are risks to any outlook, and I do believe that the risks to my outlook for inflation are to the upside. In September of 2020, the FOMC announced, and since then has reaffirmed, outcome-based threshold guidance that specifies 3 conditions the committee expects will be met before it considers increasing the target range for the federal funds rate. This guidance in September of last year brought the forward guidance in the statement into alignment with our new policy framework. To quote from the statement, these conditions are that, quote, labor market conditions have reached levels consistent with the committee's assessment of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time. Now, while, as Chair Powell indicated last week, we are clearly a ways away from considering raising interest rates, and this is certainly not something on the radar screen right now. If the outlook for inflation and outlook for unemployment I summarized earlier turn out to be the actual outcomes for inflation and unemployment realized over the forecast horizon, then I do believe that these 3 necessary conditions for raising the target range for the funds rate will have been met by year-end 2022.
And boom, just like that, the market starts to get nervous for a day, for about half an hour, and then it wakes up the next day and realizes the Fed's printing machine is still going on, and they're never going to stop. They're going to continue to grease up the market over and over and over again. More hits of cocaine until the market overdoses and dies. And by the way, when we say the market, we mean the economy too. The economy will get overdosed and it will die. And by that time, Fed Chairman Jerome Powell will be retired and perhaps touring bars and comedy clubs in the country to perform his music. What am I talking about here when I talk about music? Well, if you didn't know, here's a fun fact for you. But Vice Chairman Clarida is actually a musician. And there are some conspiracy theories that his album titles and lyrics hold some secret cryptic messages. So let's see if we can encode some of these messages. Here's a song titled Be My Girl. Are you talking about Jerome Powell, Mr. Clarida? Be My Girl, Jerome? How about this one? Take too long. Take too long to taper. How about this one? Just can't wait. Just can't wait to print. What about this one? Gone too far. Gone too far meaning the cocaine operation. And now the whole economy and the stock market got overdosed. Is that what you're talking about, Mr. Clarida? Fed Chairman Jerome Powell treated central bank staffers. Excuse me, I gotta redo this one. Fed Chairman Jerome Powell treated central bank staffers to a rare duet with Vice Chairman Richard Clarida at the Fed's holiday party this past week. With Mr. Powell on the guitar and Mr. Clarida singing, the pair performed the Bare Naked Ladies autistic alternative medley of quote-unquote God Rest Ye Merry Gentlemen. Okay? And quote-unquote We Three Kings inside the marble atrium of the central bank's historic Eccles building. Both men have long nurtured their musical talents. Mr. Powell picked up guitar as a Princeton undergraduate and played in a band a decade ago. Mr. Clarida in 2016 released a 13-track album called, quote-unquote, Time No Changes, available on Spotify and iTunes. I say these two should stick to music and leave the monetary policy of the world to rational, responsible people. Next, we have the conflict in macroeconomics data. We talked about the ISM Manufacturing Index, which showed a slowdown in economic activities when it comes to manufacturing, and even prices paid according to the ISM Manufacturing Index went down. And this, of course, gave the transitory camp lots and lots of orgasms. They've been jerking off, creaming their pants since then. But I cautioned you, looking at the durable goods report. Hold your horses. Don't jump into assumptions that the economy is slowing down or inflation is transitory from the manufacturing report alone. And the reason is the durable good orders indicated that perhaps the inflation is shifting from manufacturing more into the services sector of the economy. And this is exactly what we got. By the way, even in manufacturing, we got wholesales, and wholesales confirmed once again that inflation is still rising even within the manufacturing sector, and prices are rising higher. So perhaps the manufacturing reports that we got on Monday were outliers, because the wholesales report shows that manufacturers' prices grew at the fastest rate in more than a decade in June. This doesn't seem like a slowdown or transitory inflation to me. Furthermore, and this is perhaps the evidence that shuts down this whole transitory bullshit, we got the services report. U.S. services sector growth accelerates despite supply constraints. A measure of U.S. services industry activity jumped to a record high in July, boosted by a shift in spending to services from goods. You think I was born yesterday? Think again. But businesses continued to pay higher prices for inputs because of supply constraints. Pay attention now. The strong demand is continuing to strain supply chains. The survey's measure of suppliers' deliveries rose to 72 from a reading of 68.5 in June. So not only the base effects, but even month over month, inflation is rising. A reading above 50 indicates slower deliveries. Some businesses complained about the scarcity of appliances, laptops, as well as rental cars. Others said heating, ventilation, and air conditioning repairs also were impacted by longer than normal lead times for replacement units. Wholesalers said congestion at the ports of Long Beach, Los Angeles, and Seattle had increased lead time by 15 days. They were also facing additional delays at the Chicago rail yard. With bottlenecks in the supply chain persisting, pay attention now, a measure of prices paid by services industries surged to 82.3, the highest reading in nearly 16 years, from 79.5 in June. But hey, where is inflation, huh? Fed Chair Jerome Powell has repeatedly stated that inflation will moderate as supply constraints abate. Services industries hired more workers in July, though labor shortages lingered, especially in the accommodation and food services sector. A measure of services industry employment rebounded to a reading of 53.8 from 49.3 in June. So there you go. The whole transitory bullshit remains bullshit. But the transitory camp had another reason to cream their pants, and it is the ADP employment report. And you might have heard it from Fed officials, propagandists on TV, some YouTubers, and market observers. The ADP report signals disaster for the economy. Inflation is over. Let's get the facts, shall we? This is the ADP National Employment Report for July 2021. The private sector of the economy created 330,000 jobs. Small businesses created 91,000 jobs. Mid-sized businesses created 132,000 jobs, while large employers created 106,000 jobs. Here are important sectors of the economy. The offensive sectors of the economy. The expansion indicators, not so hot so, but not bad either. Natural resources and mining, 3,000 jobs created in July. Construction, 1,000 jobs. You'd like to see more than that in construction. You want to see 10,000, 20,000. That will be indicative of economic growth. 1,000, it's a weak number, but still positive gains for the sector. Manufacturing created over 8,000 jobs in July. But here it is for the services sector of the economy. Trade and transportation created 36,000 jobs. Information down, lost 1,000 jobs. Financial activities, 9,000 jobs. Professional and business activities, 54,000 jobs. Education and health, 64,000 jobs created. Leisure and hospitality, the biggest gain of about 139,000 jobs created in July. So we are recovering these shitty jobs. Bartenders, waiters, valet parking personnel, etc., etc. Not high-paying jobs. Other services created 16,000 jobs. Okay, so what is the problem here? Here's the problem. The ADP employment change shows 330,000 jobs created in July, less than half the estimated number of 690,000 jobs. This is the estimate from Wall Street and economists. So a massive mess here. Economists were predicting 690,000 jobs. We got 330,000 jobs. And immediately, of course, the transitory camp started jerking off once again. You see, bro, it's over. Inflation is gone. Perhaps it will be gone due to Delta. But for now, the facts are still supportive that inflation continues to rise higher. And by the way, differentiate from inflation and growth, two different things. What these transitory personalities did not show you is the following. Did the economy struggle to create jobs and meet the 690,000 estimate because the economy is slowing down or inflation going down? Or is inflation actually the reason for the miss? What do I mean by that? What I mean is, are we reaching a stagflationary period in the economy where inflation is too hot to find workers? We have a labor shortage here, and this is the reason behind the miss. The transitory camp forgot to show you the facts. U.S. private payrolls increased far less than expected in July, increasing by 333,000 against a forecast of 695,000. Likely constrained by shortages of workers and raw materials, according to the ADP National Employment Report. Ta-da! It's not that the economy is weakening. We know it is a zombified economy, no doubt. But don't underestimate the power of the cocaine. It will keep the patient alive for now. And it is creating a monster called inflation, which will kill the economy. Facts matter. And today we got the confirmation. The weekly jobless claims. U.S. jobless claims fall to 385,000 as unemployment shrinks despite the rise of Delta. This is the lowest number of unemployment claims since the pandemic began. Again, is this inflationary or disinflationary? So far, the facts, when you add them up together, they point out for inflation rising higher, despite Delta. Delta is the transitory camp's best friend. But if it doesn't turn to be the problem that wreaks havoc in the economy, more shutdowns and economic restrictions, the economy and inflation will continue to grow. And at some point, the economy will overdose. Or the drug dealer, the Fed, will cut off the supply because inflation is rising too high, too fast, and guess what? The economy and the market will also collapse and suffer a withdrawal. Either way, folks, the music is gonna stop. But for now, the facts are right in front of you. Why do you choose to deny it? Why do you choose to dismiss and deny the risk of inflation when the vice chairman himself sees upside risk in inflation? Enough said. Moving on to Robinhood, the hood. And of course, the hood opened down, disappointing. The IPO was a disaster. But don't underestimate the power and the stupidity of the Robinhoodiots, also known as the apes, the Wall Street bettors, and the likes. So the stock goes down, and I say, wow, I'm impressed that the zombies on Wall Street bets, the apes, the Robinhoodiots did not rush to buy this IPO. They still have some sense of dignity when Robinhood stabbed them in the back during the GameStop and AMC surges, the squeeze a few months ago. But again, don't underestimate the stupidity and the real reason guiding these people, which is greed. Robinhood stock price jumps as options trading begins. Surprise, surprise. Folks, I continue to say these are not investors, they're not traders, they're not even gamblers. They're zombies hooked up on meth. They're brain dead zombies on drugs, chasing the next score, chasing the next lottery ticket. Regardless, they give you the illusion that there is a tight-knit community, a tribe, the apes, AMC together. There is no such thing as together, fools. You invest on your own. You buy when it makes sense to you. You sell when it makes sense to you. This whole tribes and teams, it doesn't work that way. You can get stabbed in the back every single time. The apes, they dump AMC, they chase Robinhood. Robinhood goes up. Now a lot of them are holding the bag. Then Robinhood goes down. AMC goes up, and here we go with the funny games in the market once again. So what caused the hood to go down today? Here it is. Robinhood stock falls after news of early investors set to sell shares. Ta-da! The early entrants hit the jackpot. This is insane. The Robinhoodiots are a blessing. They gave us 10 years worth of gains in a single day. And now the insiders, the early entrants, are dumping and cashing the jackpot. Meanwhile, the Robinhoodiots and the likes are actually pumping the stock thinking it will go to the moon, Robinhood to 1,000. What a bunch of fools. The insiders themselves are dumping, and the Robinhoodiots say right here on the top of my head, my little head, nice and warm. We know, bro. We know more than the insiders. Robinhood is the future, bro. Robinhood to 1,000. Really? You know more than the insiders who invested in this garbage when it was nothing? It was a venture capital deal. You know more than these people about the business they invested in. Okay, and before we wrap up, folks, everything you see in the market right now is fake. Every move is fake. The entire market turned into a casino. It always has been a casino, but now it became a casino high on meth. Full-blown irrationality in the market. And the entire market is moving solely based on the options market gambling. And therefore, you're seeing these sharp bumps and sharp dumps all over the market. No themes, no consistency whatsoever. Therefore, it is a dangerous period in the stock market unless we see some sort of a conformity that we're going up or we're going down. But this market, moving solely based on options gambling, is extremely risky. And with that, let's move on to cover some charts, starting with the SPY 30 minutes chart. And here it is. On face value, there is nothing to see at all. The SPY still trading within range, defined peaks and defined valleys, and it is trading above the support of 438. On paper, this is bullish. This is consolidation until the chart breaks up higher. This is another way we can look at the chart when we switch from candlesticks to a good old school line. You can see the consolidation range with a defined support and defined resistance. And we have the mid ground around 439. This is the bull to bear advantage line. And the SPY is trading above that line. So for now, looking at this chart alone, the bulls have the advantage. And the likelihood is the SPY will break the consolidation range higher. But hold your horses here. We need to get a confirmation from the BLS jobs report tomorrow, because the report will change how the chart is going to break the consolidation range. Therefore, even if it breaks higher, let's say we get good news, good enough for the market to rise higher, and the SPY breaks the consolidation range higher, indicating that a new, fresh leg higher is about to start. You're still going to have plenty of meat to chase the rally. You don't have to be the first one to hop on the ride. Wait for the confirmation, because when we move on to a daily chart for the continuous contract in the SPY, we still have negative divergence on the RSI indicator, not a significant one, but an apparent one. We have consolidation and weakness in the MACD indicator, signaling that the momentum is already too high and too toppy. Nothing is wrong with the candlestick patterns. Matter of fact, they're bullish for now, a bull flag consolidation, yet I'm keeping the thumbs down until we get a confirmation tomorrow. If this chart breaks up higher out of the consolidation range, then we'll know it is a bull flag formation starting a new rally higher. But for now, I am too cautious to do so, and the reason is you can make an argument either way. You can make an argument for the market breaking the consolidation range higher. You can also make a solid argument that it will break the consolidation range to the downside. And you can bring up the volume, the options trading activities, the muted reaction after earnings, the seasonality, many other factors to count beside the technicals. What about the cues? We're using a line chart here in the 30 minutes. We have a defined channel with peaks and valleys. The cues is reaching close to the peak, the top of the channel, breaking above the channel, going down to check it for support, and then bouncing higher will be the ultimate signal. The Nasdaq is about to create another leg higher. But if it reaches the top of the channel and it fails and goes down again, then here we go. We're back in the channel. We're back in consolidation range. It remains a positive consolidation range, but nonetheless weakness in the momentum. For now, the chart's trading almost at all-time highs above all of the support lines. So it is extremely hard to find a reason to hate the chart looking at this one alone. Now, when you switch to the daily chart for the continuous contract, you can see the negative divergence on the RSI. You can see the negative divergence in the MACD indicator. You can see that both of these indicators are already too high to begin with, indicating that the momentum is more likely to frizzle out than to be reignited again. 15,000 is the threshold, and we're watching for the weekly closing. Closing the week above 15,000 will indicate that the Nasdaq has the strength to do that reigniting of the momentum higher. But if it reverses, closing below 15,000, that will be one of the most ultimate bearish signals that we have seen in the market so far. What will it take for the Nasdaq to flush down below 15,000 in the futures? A lot of things, but namely the BLS jobs report that is about to come out in the morning tomorrow. We'll talk about it in details in the conclusion of this video. What about the IWM 30 minutes chart? I'm highlighting the 218 as strong support. It has been holding on and on and on, retested over and over and over again. We have a bull flag consolidation here in the IWM. And today we saw the reopening trade, mainly in the IWM, outperforming. And if we get the news tomorrow from the jobs report that the economy is creating jobs and still growing, regardless of Delta fears, perhaps Delta fears are overblown right now. Economically speaking, not from a healthcare perspective, but economically speaking, perhaps Delta fears are overblown. And if the non-farm payroll report confirms that, then I see the IWM playing out this bull flag consolidation and breaking above the resistance of 223. What about the Dixie? This is the mystery. The Dixie doesn't want to let us know which way it's about to go. It is holding for dear life here at 92 as support, holding over and over and over and over again. This is a sign of resiliency and strength. From a candlestick pattern, it looks as a bear flag pattern, which will play out to the downside. But the behavioral psychology part of the chart is showing a lot of resilience and refusal to break below 92, indicating that if the conditions become suitable for the US dollar to ignite a rally, it will rebound higher. What will create these suitable conditions for the dollar to bounce higher again? How about the jobs report? If it comes out too hot, let's say creating over 1 million jobs, then this will spark tapering fears once again. Tapering fears take the US dollar higher. What about gold? What's going on here? Gold failing again to break above 1,830. For now, neutral. You can make an argument that gold is going to go down or up from a technical perspective. But we know what gold is waiting for. Gold is waiting for the final move from the US dollar. Are you going to pop over 92 again, or are you going to break below 92, Mr. US dollar? You better make your move fast, because I've been waiting for a long time. Sincerely, gold. What about yields? What's going on here? The good news for yields, and the Fed, by the way, they don't want yields to go down below 1% again. That will be an indicator not just for inflation being transitory, but perhaps an upcoming recession, that the economy will move back into a recession, a double dip recession. But speaking of a double dip, yields kept the double bottom at around 1.2 basis points and bouncing higher. Again, if the jobs report comes out supportive, I believe that yields have the technical setup to break higher, even above 1.28 basis points. It depends on how the report will be cooked. Rare, medium, medium well, or well done. We'll see. Of course, the 10-year yield would love a medium well scenario, because it will indicate that growth is still intact and it will ease all of these fears about the pace of economic growth slowing down or inflation slowing down. Medium well will be good for yields, but it will not be good for the TLT. TLT weekly chart still holding above 149. The problem is the weekly closing. If it dips below 149, and if it dips below big, erasing a few candles, then we have a confirmation for a reversal. This is what I'm watching for as we get the report tomorrow. What about the VIX? What's going on here? We talked about the third time is a charm. We have the 4 hours chart for the VIX. Is third time a charm or is third time a dump? For the VIX. Critical day tomorrow. The weekly closing, extremely important for the VIX. It knocked once on 20. It didn't happen. It knocked twice. It didn't happen. Is the third time a charm? We will see. Now, what would the VIX like in terms of the upcoming jobs report? Well, the rare scenario will be bad, indicating that the economy is slowing down significantly. The well done scenario is also bad for the market, good for the VIX. And the reason is it sparks all of these tapering fears. Jerome Powell says concentrate on employment, not on inflation. Okay, here comes employment. And if it is too hot, we get a problem, and this will spark fears in the market about tapering and raising interest rates. The VIX pops higher. What about Apple? No update here. Consolidation range, 145 as support, 150 as resistance. Waiting and waiting and waiting for the market's next move. And Apple is the market, which leads me to an important point. Pay attention now. If the recent days of gains in the market were based on legitimate buying, we would have seen Apple, for example, trading higher. As institutionals, retail, and the likes buy the ETFs, the SPY, the Qs, and therefore buying Apple and pushing it higher. But the market has been moving with certain names popping significantly higher, meaning based on the options market activities, which makes the so-called bull flag consolidation in the SPY and the bullish formation in the NASDAQ very shaky and not trustworthy. What about Tesla? What's going on here? We have 629 as support. We talked about that before. I'm highlighting at least 3 times when Tesla confirmed 629 as support. You see, when a chart visits the support line over and over and over again, and it bounces over and over and over again, it is a sign of strength. A lot of technical analysts lie to you, and they say it is a sign for weakness, that the support is about to be broken. False. When you bounce over and over and over again from a support line, it is a confirmation that this support is solid. As if the chart is saying to market participants and watchers, I keep on bouncing and bouncing and bouncing. You're waiting for the bottom. You're waiting for a good opportunity to buy. It's not going to go lower than this because I keep bouncing and bouncing and bouncing. And therefore, observers of the chart will buy it knowing that they have a floor in 629. In the opposite scenario, when you have a chart, in this case Tesla, knocking over and over and over again at the resistance line, it is an indicator that it is about to break above the resistance line. As if the chart's saying, I'm not done trying here. I will continue to keep knocking and knocking and knocking on the chart, on the resistance line, and if you people just buy the stock or call options, I'm ready to break above the resistance. This is what the chart of Tesla is saying right now. The resistance in this case is 720. And Tesla is saying, forget the gap. This was my expectations, by the way, that Tesla will go down to close the gap and then bounce higher to attempt another crack at 720. But the souffle says, I got a lot of strength here. I'm going to continue to knock over and over and over again at 720 until I crack above it. We will see if that energy, the little bit of energy needed to crack above 720 will come out tomorrow or not. We heard Biden talking about the EV infrastructure or whatever, but Tesla was not invited because it's not a union company. Regardless, it was a positive catalyst, a tailwind for car manufacturers, specifically EV players, Ford, General Motors, etc. The ones who were invited, in addition to lithium, cobalt miners, all of these names were trading higher today in EV optimism. Tulips, BTC, what's going on here? We talked about the bounce, the significant bounce higher after the rescue operation by Dorsey, Musk, and Wood. The bounce happened on the hands of shorts who are covering And traders, technical traders like you and I, who are eyeing a crack above 35,750, which will take the chart all the way to the resistance at 42,000. This will be the exit point for us technical traders. And then the chart will go down, asking the laser beams, are you guys going to build on this rally? Are you going to buy it all? Or are you all in and you got no more cash to buy more tulips? Well, so far, at least for 2 days, the laser beams have showed up and they bought a lot of tulips. So we're eyeing 42,000 once again as a target. You don't want a chart heading into 42,000 to fail before doing so. That will be an ominous signal. But for now, we're eyeing 42,000, another crack, another shot at breaking above 42,000. What about ETH, Ethereum? I bought it since the rescue operation and I got out at around 2,500. That was my exit goal. But I told you the chart has the technical setup to continue to rally higher. And now it is trading almost at 3,000. It could go above that, but as a disciplined trader, I will be considering taking profits altogether at 3,000 because at that point, number one, you'll face resistance. Number two, you'll face the extended technical indicators in the MACD and the RSI. And that will pave the way for a sell-off, a cooling down of the recent surge higher. Lastly, what about AMC? We're using 2 hours chart here. The ultimate test was 32. For about a day and a half, the apes were in trouble, deep trouble, as Robinhood stock started trading higher. All of a sudden, AMC is not the cool kid in the block anymore. Robinhood goes down, all of a sudden, AMC is back as the coolest kid in the block once again. And the apes did significant repair here because you gotta keep trading above 32 and close the week above 32. You don't want the stock to trade significantly higher, a short squeeze, a gamma squeeze ahead of earnings. You want the surprise to be the upside. You want your stock to enter the earnings report bruised and wounded because expectations are too low. Any good news will pump the stock higher. So this is what the apes should be eyeing for. Closing above 32, not by much, but the week above 32, further solidifying 32 as support, and then wait for the earnings report. Any good surprise will trigger a short squeeze, a gamma squeeze, and AMC could trade higher, as high as 52. But you got to remember this, the big picture. The stock is trading in la la land to begin with, up thousands of percent year to date, trading well above the fair value of the company. So perspectives matter here. Anyhow, folks, we're moving on to the conclusion of this video. What do we have on the economic calendar tomorrow? The big one, the non-farm payrolls. Will it be rare, medium, well done, medium rare, an aristocrat? Which one? Can you trust the ADP report and assume that this will surprise to the downside tomorrow due to labor shortages? It could. Or do you trust the weekly jobless claims and the services report, indicating that the travel and leisure sectors of the economy are growing rapidly once again? And perhaps 850,000, which is the estimate, could be exceeded. We will see. The trick is, you want a good number. This is for the market, of course, for specifically the inflationary trade. You want a good number, but not too good. You want to keep the narrative that the economic growth is still intact, the recovery is still underway, and inflation perhaps will start to moderate because we're not creating 1,000,002 jobs. We're creating 800,000, 700,000 jobs. Even a minor disappointment and a miss will be good for the stock market and yields to blast higher again. If the number is too hot or too weak, then we got a problem, a big one, and it will shake the market down to its core. The kitchen will be extremely busy in the morning. What about the earnings calendar? Friday, we have DraftKings and Norwegian Cruises. Ladies and gentlemen, we reached the end of this video. Thank you for watching. This is all I got for you for tonight, and I will talk to you again tomorrow. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.